Welcome to the Tom O'Brien Show, and good afternoon, all you wonderful money masters and treasure hunters out there. I'm your guest host, Steve Rhodes, filling in for Tom O'Brien today. This is the last day of Tom's vacation. Of course, I know he's still vacationing tomorrow and Sunday, but he'll be back in this chair on Monday. And folks, thanks so much for joining me. I absolutely love being here with you. Hopefully you're off to a great Friday, a great start of your Friday. For most of you, it's coming to an end. And, thanks for everybody listening to us on all of our new affiliates, everybody that's listening to us in a car. We're going to talk about driving a car today, folks, because I can equate driving a car to the markets. I absolutely am going to teach you something today. I'm going to teach you either about charting, about what these markets are doing. I just simply, when you go home today, when you're on your way home, maybe you're already at home, if you will, I want to be able to teach you something. You can go back and take a look at the charts, and we're going to do that. You can always watch us on Tiger TV. So if you have the benefit of watching us on Tiger TV, go to your internet site, go to the TFNN webpage. You can click on the Tiger TV button. You can watch us live. You'll be able to see live streaming video of the charts that I've got. You can also go ahead and watch us on your iPhone, your iPad. Maybe some of you out there have a new iPad today. And if you do, whether it's new or old, we'd love you to bookmark the TFNN page on your system. Just go over, if you will, on the homepage of TFNN.com, and you'll see over on the right-hand side a little area that's got a red border around it. Click on that. You can bookmark them. We're just one button away from you being able to see us each and every day. And, folks, let's go take a look at these markets here right now. You've got the Dow finished down 20 points, closing out at 13,232. Looks like this has a shooting star candle formation. We'll go ahead and talk about that. It is a caution sign for sure. Not a substantial caution sign, but a caution sign for sure. You had the S&Ps finish up 1.5, finishing out at 1404 for the week. Certainly up, certainly a great week when we take a look at the markets out there. You had the composite down 1.11, all ones across the board, not even maybe 0.04% on the way down. The small caps leading the charge, tying the charge, if you will. In fact, this has to be a photo finish because you had the Dow down 0.15%. You had the small caps, the Russell 2000, down 0.15 as well, down a full 1.28. How about Apple, folks? Apple was up, down, and all around, as Tom likes to say, and you had Apple close up 1 penny, up at 585.57. If we take a quick spin around the world, just so you know how things closed around the world, you had the DAX up 13 points. That was up after being up quite a bit. You had the FTSE up 24 points, the Nikkei up 6, Hang Seng was down 35, and you had the Shanghai up 32. How about King Dollar? We know you want to know what's going on with King Dollar. You had King Dollar down 39 ticks. Gold traded out and closed at 1660.2. That was up 70 cents. That's after being down a pretty decent amount of money this week. You had silver down 14 cents. You had light sweet crude up $2.21, trading out at 107.21 or 28. We'll go take a look at the light sweet crude contract and anything else you'd like. Our call number's 877-927-6648. So let's start by taking a look at the Dow chart. Now, the Dow made a high today, got all the way up to the 13,289.08. So, folks, when you take a look at this candle, if you're watching us on Tiger TV, what is the one thing that you'll notice about today? What is it? The thing you'll notice is that it closed at its session lows. Now, it has this high wick up here, if you will, so it's a little bit of a shooting star. The wick should be twice the size of the body, so it'll be a close call. I'll have to take a look at it, a little bit later on, but it looks to me, but it did close at its session lows. And look, after a huge run that we've had, and let me show you, one of the tools that I like to be able to teach people, if you will, are different expansion and contraction techniques. They're Fibonacci numbers, if you will. And, folks, I do equate trading like driving a car. Can you remember? Well, I remember back the first time, when I got my license. That certainly wasn't the first time that I learned how to drive a car. But I equate trading to driving a car. And look, the fastest way to be able to learn anything, and stick around today because in the next session, I'm going to show you these 7 techniques to being able to trade a breakout. This is one technique that you'll want to learn. It doesn't matter what your skill level is, whether you're an advanced trader or whether you're just new into trading these markets, you're going to want to stick around to understand this skill because you can make a bundle of money. But one of the things, folks, and why I equate trading to a car, each of you, if you're in your car right now, and remember when you first got your car and you were all confused because you had all these mirrors, you had all these cars coming at you on the left-hand side, right-hand side. Well, if you take a look at a car, you've got a rear view mirror, right? Now, what's a rear view mirror compared to when you take a look at a chart? That's right. A rear view mirror is nothing more than looking back. That's the left-hand side of a chart. Anybody can teach and trade the left-hand side of the chart. And I'm going to be able to teach you how to do that. I'm going to teach you how to be able to identify patterns that are out there. We'll even take a look at the Dow and figure that out. Then you've got your side view mirrors. In fact, I'll teach you something right now about if you're driving. And most people don't know this. Most people take their side view mirrors and they'll turn them in so that they are right alongside of the car. That's not how you do it. Take a look at your rear view mirror, folks, and where the left-hand side of that rear view mirror cuts off when you're looking back, make sure that the right-hand side of your driver's side mirror is where it picks up. In other words, it's going to give you, in essence, almost 360-degree look around your car. And so that's what your mirrors are supposed to be used for. So on your right-hand side view mirror, when you take a look at your rear view mirror, whatever you're looking at in the rear view mirror, wherever that cuts off, maybe it's a tree you can see, maybe it's a simple car, maybe it's half of a car, the left-hand side of your side view mirror should be picking that area up. Well, when you take a look at trading, your side view mirrors, folks, they're called the indicators and patterns, ABCs, expansions, and so I want you to understand that charting is just like driving a car. Now, each of you have an engine, right? Some of you have got racing engines, if you will. Somebody out there is listening to us driving a Ferrari, maybe driving a Benz, maybe driving, an old 1972 Duster. Who knows what it is you're driving, but each of you folks, you've got an engine out there. And an engine in trading is just simply nothing more than knowing the expectancy of your system, exactly how much money it's going to be able to produce, just like how much engine output your car has. And then the car itself, think about this. Are you driving your car right now with insurance? Absolutely. I hope you are. You're driving it with insurance to insure against accidents. Accidents, might be, in this case here, when we take a look at the car, we take a look at insurance and trading. That's nothing more than using your stops. That's just simply good money management techniques. Now, folks, the quickest way to learn anything is to link the known to the unknown. That's what I'm going to do to you. Just imagine if when you were learning how to drive a car, you had Mario Andretti or Dale Earnhardt or Jeff Gordon or Emerson Fittipaldi, Bobby Unser, Al Unser, Kyle Petty, whoever it might be that your favorite racer was. If they were able to teach you how to drive, don't you think you could have got to point A to point B a little bit faster? We haven't even talked about the stick shift. We're not going to talk about that. But let's take a look at the Dow. Let's take a look at one of our side view mirrors out there. One of our indicators, and that indicator is a expansion indicator. And what we know about these markets, folks, is they are living, breathing organisms just like ourselves, if you will. And when they expand, when you've taken a deep breath, you're going to expand either to the 1.272 or the 1.618 of the most recent swing point. And when you take a look at the Dow, what we're talking about, folks, we're talking about the high that is in the Dow at 13,055, put in there on leap year day, February 29th. That was the high. The Dow makes a low. This is just taking a look at just this last breathing pattern that was inside the Dow, makes a low out there at 12,734. Well, when you take that difference and you multiply it times 1.618, add that to the bottom, that's going to give you a number of 13. It's just math. 13,254. That's our simple side view mirrors giving us a mathematical equation. Where did you close today? 13,232. You trade it up above it. It would make sense that you would see a pause in action, a little bit of a breathing pattern. Maybe have the Dow pull back. Where could it pull back to? Well, folks, if it does pull back, and it certainly gave us the signal today that it wants to do that, it wants to rest the team. It wants to pull out the first string, let the other squads play, if you will, and rest up. Now, a normal 618 retracement. In the next segment, we're going to talk about the 7 steps to being able to buy a breakout. Well, if I told you that 0.618 is a normal retracement, folks, in this case here, the 0.618 retracement is nothing more than coming back to where the Dow broke out on March 13th. Three trading sessions ago, not including today. That low, 12,953. Boy, that would be a beautiful gift, wouldn't it, if it could pull back to where it broke out? Let me show you about that when we come back from this break, folks. 877-927-6648. Dow is off 20, S&P's up 1. The rest of the market relatively flat. We'll be right back, folks.